onto our panel discussion on the future and trends in the real estate industry. I'd like to first start by introducing our panelists. And I think we have a few more people joining. Let me just make sure that everyone's in. Okay, perfect. Okay, so 3 panelists, all very experienced in the real estate industry. First is Nelson Lau. He's a Columbia College class of 2005 alum, and he is the CEO and founder of PropertyQuants.
Hey, hi. Thanks for having me.
Next, we have Kevin Cow, who is an alum of C's class of 2006. I apologize. The newsletter said Columbia College, but it's engineering. And he is the CIO of NWP Retail, which is a major developer and retailer in Indonesia. He's currently here in Singapore, but splits his time between here and Jakarta.
Hi, everyone.
And next we have Danny Sedjati, who's a Columbia Business School class of 2006 alum, who is based in Jakarta, and he's the director of Leo Palace 21, a Tokyo-based multinational real estate developer.
Hey guys, happy to be here.
Thanks again for being on the panel today. First, I'd like to just start off, it's obviously the Columbia experience that brings us all together. So I would just like each of you to share with us what you studied at Columbia and how your time at Columbia and the alumni network after graduation has been helpful to you in your career. Maybe Danny, if you could kick us off.
Okay, great. Thanks, guys. Thank you for having me here. I think I'm the only one that's not in Singapore, but in spirit I am, I guess. So I enrolled in Columbia for my master's, the MBA, through the executive MBA program. So basically that's the class that meets every Friday and Saturday. It was a tough experience because I had a full-time job. So juggling work from Monday through Thursday night and doing schoolwork and homework during the weekend is tough. But the great thing is that I learned the professors in Columbia, they're not just want to teach you, but they want to learn about you yourself as well. They want to know everything about you. They want to also lend a helping hand. Even my classmates, although the class were competitive, anytime I had problem with a subject, they're always there lending hand, helping hand. Now, I think that the sense of camaraderie doesn't stop there during school years, but also when I moved to Indonesia, it was a Columbia alum who introduced me to Indonesian real estate and got me my first job. So I think the overall experience has been amazing, and I didn't learn that from my undergrad. I think that's what I could share with everyone. Hopefully that helps.
Thank you, Danny. How about Nelson?
Yeah, so I did the undergraduate at Columbia College. I was majoring in economics as well as mathematics, statistics. But you know, it's pretty good that you have the option to take all sorts of different classes, right? So also had the ability to dabble in computer programming. You know, I think I took something that was like mathematical logic, something along those lines. I forget the exact title, and all of that turned out to be really useful, right? As we move forward, you know, and I ultimately continued to do a PhD in decision sciences. You know, that sort of laid the groundwork, and also to lay the groundwork for learning data science, which is really core to the business that I'm running today. So that's definitely how it helped. And then, you know, just, you know, before signing up for or getting into Columbia, actually it never really been to the US before at that age, right? And then being in New York, you know, turned out to actually be really, really great because even career-wise, right? Just the opportunities that, you know, I was, through the virtue of being at Columbia and being in New York, able to intern at a quant hedge fund, and then ultimately land a job there, which, you know, sort of set me on a different path from where I would otherwise have been. You know, and all of that sort of informed what I learned along the way and how we can apply these sort of evidence-driven methods to investment, so that, you know, would not otherwise have happened. You know, as you asked about the alumni network, absolutely, that's really helpful. Kevin, who's here on this panel as well, is also, an advisor, an investor in the venture that we're on right now. So that's really useful. And just in terms of networking and connecting, countless times, even just randomly on LinkedIn, we do meet up with people just simply on the strength of, hey, we're both Columbia alumni, and that can lead to certain interesting conversations and opportunities as well.
Great, thank you, Nelson. And Kevin?
Yeah, I studied biomedical engineering, and which is obviously a very different field from what I'm in now. But I think the engineering degree has really prepared me for a finance role, which is the first job that I got into. I think how Columbia's helped me. I think I get a lot of unwarranted praise just because been to a prestigious university, and I think a lot of people just kind of disregard how talentless I really am. And doors are opened, or rather some doors are not closed. And I do credit the university name on the resume towards getting a lot of interviews in the early stage of my career. And I think throughout my career, I've met various alumni, and I've always been surprised at the people I meet who turn out to be fellow Columbia alumni. And for reasons which I sometimes find, which is a little bit confusing, that we all come from different schools, different programs, are in Columbia at different points in our careers and our lives and different years maybe, but somehow that shared connection of just whether it's being in New York City, being in school campus, just kind of hunting for cheapest food or looking for jobs, all that kind of connects us in a certain way. And I think that sort of softness that comes when you find out that somebody is a fellow alumni just helps a lot in having a softer discussion. And I think beyond that, it's really up to each of us to build on that. But yeah, so I think the alumni network is very important. I've actually had fellow colleagues in my previous jobs, including some of my head of the whole team, the global team, who also happened to be a Columbia alumni. And so I think it surprised me in a lot of ways, and I've been very thankful and grateful for that.
Apparently, Columbia also taught you excessive humility, or extreme humility in this case, of putting yourself down. But obviously, you're all very accomplished in your fields, and the Columbia degree certainly helped the network. But you have talents that you're bringing to the industry, so that's why you're all on the panel today. Nelson, I'd love to hear a bit more about your business, PropertyQuants, especially for those who haven't attended the recent event that we organized with you. So love to hear a bit more. And what advice would you have for those who are considering starting a business in either Proptech or the real estate sectors?
Yeah, absolutely. Maybe to give the context, just a little bit of background. After Columbia, as mentioned, I did have the opportunity to start out at a quantitative hedge fund out in New York, and then continue to deploy sort of quantitative investment models in the financial markets at high frequency trading firms, and then also sovereign wealth fund. Along the way, was also investing in a small way in real estate for myself in a few different cities, and just sort of comparing the way that investments are done, not for everybody, but for a large proportion of the industry relative to how decision making is being done in finance. Sort of spotted the opportunity to bring a little bit more of these data-driven or data science approaches to real estate investment. So about 3 years ago, we started this company, PropertyQuants, and to further fill in sort of the journey, right? As with any startup, it's never a kind of linear path. There's a lot of meandering and figuring out, where the market wants to accept or pay you for certain things, right? We started out and pretty early had some actually just good fortune, right, of being invited to participate in the College Techstars program. And that was out in Toronto. We had a little bit of investment from these companies and had the opportunity, which is probably the most important thing, to network and chat with a whole bunch of mentors, right? So they put you in front of like 150 mentors over a very short time period. And as we were chatting with people in the real estate space and adjacent to it, we were saying, hey, we want to apply data science and machine learning to real estate. And we kind of got this look from people about like, hey, what does that mean? What is that all about? What's the point? What's possible? And, also kind of by good fortune, a little bit after that, we were invited to conduct a course, formal course at the Singapore Management University in real estate data science. And that's from another sort of also educational network, because I went to INSEAD after, and my classmates are there teaching and say, hey, we want an elective. So we ran that. And then we spotted this opportunity, would people be interested to learn specific applications of data science and machine learning to real estate? And so we launched that. And actually, next week, we're going to kick off the 11th batch of this course. So pretty, consistent now interest globally, with some institutional participation from funds and valuators and PropTech companies to learn applications of data science to real estate. So that's one arm of the business. If anybody's looking into this space and wants to understand the possibilities, feel free to find out more on our website as well. The other lines of business that PropertyQuants does, we also do build out specific analyses, applying data science methods to real estate in terms of pre-built analyses for consumers. If anybody here has children of almost going to primary school age, and you're wondering sort of where is the best place to live, or in order to boost my chances of getting in the most, we did launch a website you can sign up for called schoolguide.sg that marries these two analyses together, helps you strategize about which properties to buy or rent to get your kids into school in Singapore. So that can be useful for you. But we also do some paid data science consulting projects as well. So we're on the third paid project right now. So that's the second line of business. And looking forward, we are looking to apply these methods to directly sort of advance the way that physical investment in real estate is being done. And look forward to hopefully making some progress and announcements on that if anybody's interested in the near future. So I guess so that's about PropertyQuants. Again, if anybody is interested in the space, do feel free to get in touch. And then in terms of PropTech, right? I think Kevin and Danny will be much more well-versed to comment about starting businesses in the traditional or non-PropTech real estate sector. So I leave that to them. But PropTech, I will say, it's just really growing. There's a lot of interest in this space. One of the statistics that we often quote is that funding for companies in the space has gone up more than 150 times between 2011 and 2019. You can just see that. If anybody wants to get plugged in really quickly into the PropTech space, in Asia, we can connect to Asia PropTech or the Hong Kong PropTech Association. Globally, you can look at CRE Tech or Unisu or PlaceTech. There are some conferences. Conferences are coming back. So apparently CRE Tech is doing a conference out in New York. I think it might be this month or next month. If anybody's around there, have a look. And that's a pretty quick way to get stuck in or find out more about the space. On our website at PropertyQuants or on our YouTube channel, we have a number of webinars where we do survey the space. So have a look at that. Just as a general overview, there's tons of opportunity, partially because, and maybe this is a biased view, but real estate industry, has a lot of potential to catch up to the curve relative to, say, the finance space. So there's many opportunities there. Anybody based in Singapore, Singapore's an interesting location to try to launch it, just because, generally there is an interest in real estate, right? There is a lot of wealth in the space. If you are looking at building something out to analyze Singapore markets, Singapore is extremely transparent and trustworthy data geography, right? So you can do a lot of stuff. But on the flip side, in terms of the market size, we're pretty small here. And on the flip side, there aren't specific PropTech VC funds. If what you're looking to do is build, a very rapidly growing, large PropTech VC-backed company, there are some accelerators here as well. So that is an interesting space. If anybody wants to find out more, do get in touch. I will say, just as sort of final point, one of the things we learned along the way is needing to quickly figure out what the market will pay for. And then there are some potential challenges or differences with that in Asia and with real estate as opposed to outside of Asia and in other interests, in other industries. So yeah, there's something worthwhile to quickly test and verify.
Thank you, Nelson. Just continuing on the theme of entrepreneurship, Danny, earlier in your career, you founded a company which was later acquired by Douglas Elliman, a familiar name to those who have lived or worked in New York City. What advice do you have for founders who hope to have their startup acquired by a larger business in the future? And what are some lessons you learned along the way?
Okay, well, thank you. So I guess there are a lot of lessons. Now, I'll talk about the product first. In any company, you cannot be like everybody else. You need to create a niche market, and that's one thing that companies will look for. Because big companies technically have a lot of departments, and you need to find out what is that one department that you're able to add value to. But on the topic of how to sell a company, that's usually a very interesting topic for many founders, for many entrepreneurs. First of all I like to say is that if you want to build a company, your first thought should not be how to sell my company. I think when you build a company, you need to build it to last forever. But thinking of an exit strategy early on will give you an option and prepare you should you need to make the hard choice. Now, there was a company that I was involved in. That was our first company, and we made many mistakes. I think it was sheer luck and many begging, many hard work that this element purchased us. But from there, I learned a few things that I like to share with everyone today. Now, if you do have aspiration to sell your company, right, you need to have a system. That's very important. First is you need to understand your industry. You need to understand your industry and your market. And think of the three categories of the companies that want to purchase you. Some companies want to buy you out because of your tech or your system. Some companies want to purchase you because of your customer base or how fast your traction is. And some companies want to purchase you because of your expertise. Companies want to get into a specific industry and they want to start fast. And this is why they acquire you. So those really are the three main buckets that you need to think about. Now, within those three buckets, you need to think about the white space. Because oftentimes for a big company, large companies, especially public companies, they usually have a vision of where they want to go. They have a product roadmap, right? So your job is to think about how can your venture help them? How can they avoid the white space in that strategy? Now, this is not an easy task because you can't figure out what the company needs, right? I mean, it's not available online. But for a short exercise, what I like to do is to pick around 5 companies for each categories. And once you pick that, so 5 times 3, around 15 companies. Once you get those 15 companies, you want to know who are the people in there. Normally in corporation, there are 3 main people that are decision makers on buying a corporation, right? One is the CEO. He's the one that has all the P&L. 2, you have the corporate development guys. These are guys whose main task every single day is look for acquisitions. And 3rd are the product guys. Product guys are usually your cheerleaders. They're the ones that will help you convince your product to the CEO and the developer guys. And these are the ones that will figure out if your company will have a good synergy with theirs. And what founders often ask me is that, okay, I found the companies. I know the CEO. What do I need to do? Well, the answer is that build relationship. Build relationship right away. Even after you acquire your first customer and you never want to sell for another 15 years, get to know them. Because relationship is built in more than 2 months, 1 year, 3 years, who knows, right? And you want to be in their radar all the time. You want to keep them updated about your milestones. Because in my opinion, the best companies are not bought, but they are acquired, and they're acquired in a premium. So by solidifying a relationship early on and by telling them what stage you're in your venture, it will help you create the premium value so you want to sell the company in the future. I mean, that's pretty much the biggest skill lesson I learned, selling Manhattans and also having to acquire some companies through other ventures.
Great, thank you for sharing all of that. And I think especially the point you made about you want to build a company for the long term, because obviously that would be why any company would want to acquire you. So I think that's valuable advice. I think some people really think about it in terms of short-term acquisition, but making sure those systems are in place. And yeah, I think that's really valuable advice that you've shared. Just moving on a bit to the outside of Singapore context, the real estate market in Indonesia. Kevin and Danny, would love to hear your observations on the real estate market in Jakarta, and are there any trends in other parts of Indonesia which you'd like to highlight?
So, real estate in Indonesia, it's very interesting right now with COVID-19. Like, I guess it's very hard to give a really good perspective. I can tell you what's going on right now in Indonesia. The COVID-19 has made the government enacted several lockdowns within the past 2 years, and that put heavy pressures on the retail, the commercial buildings, offices, but it's been very great for logistic warehouse, and it's been very great for data centers as well. We see many companies coming to Indonesia wanting to build data centers because people are embracing e-commerce nowadays. And also in the residential single-family house, it's getting significant demand, although I can't say the same thing with apartments. Now, this pandemic has changed the way developers make their building. They need to change on how they build it, meaning that back then when you build a house, all you do have is a bedroom, bathroom, living room, that's it, right? But because we see many people having a work from home attitude, which will stay for longer, developers need to have a very big open space in their complex. It needs to have many greeneries, and inside the house itself, it's very important now that they have a bathroom right in front, like once you enter your house, on your right side or left side, within close proximity to have a bathroom, because people want to take shower right away to avoid having diseases get into the house. And also they need to have a space to work. That's the most important thing I see when I look at our development as well as other key players in Indonesia. Another thing is that in real estate, we are one industry that's very slow when it comes to adopting technology, and especially in digital marketing. But due to the lockdown, people cannot come to the marketing gallery, they cannot go anywhere. So the digital marketing is somewhat gone now. Developers need to embrace digital marketing. They need to use all the tech as best they can do. Things such as 360 video tour, that's very important nowadays. And I do see some buyers do not even have to go to the site to purchase anything. Everything is done online. Another thing that I'd like to add, one area that I see is very interesting is that in the self-storage space. Now, I said earlier on that logistic warehouse is getting positive demand now. Self-storage is also one area that's not being looked into, but people are demanding it. Now, everyone that I know of nowadays are selling things online, and they need to have a storage for their stuff. And oftentimes their house is too small, or you just need something that's close by. Now, when you go to a logistic warehouse, oftentimes it's in the suburbs, far away from city centers. But having a self-storage space that's close enough nearby the house will be more convenient. I know this is something not a big problem in Singapore, because they have a lot of self-storage in Singapore and also in New York, but Indonesia is not gaining popularity yet. But it's one area that many investors are looking into. Hope that helps.
Thank you, Danny. Kevin?
Yeah, I mean, I tend to agree with what Danny is saying. I think the trends in Indonesia are quite similar to what you see in the rest of the world. I think the modernization, the evolution of the sectors, it's apparent everywhere. Similarly in Indonesia, I mean, you see the face of retail is changing. The way people are going to malls is changing. Their demands are quite different. The growth of logistics clearly very strong as well. The changing patterns of the usage of office space and so on, all that is very real. But I suppose an observation just in general about something which is different in Indonesia versus some of the other markets that we see is that I do find that there's more of a generational handover of leadership in the traditional companies, with a lot of younger, hungrier leaders who are more, well-versed in a corporatized manner of how to deal with things, working with boards, working with shareholders. And I think that in general helps the companies to open themselves to an international community. A lot of these guys, a lot of the younger guys have worked and studied abroad, Columbia alumni as well. And so, the sort of the language that they speak with the international community is it's more cohesive. So they bring back best practices, and they're able to then marry what they've learned with a lot of local relationships, businesses, and all that. So all that's very strong, and I think that kind of shows a modernization of the other landscape in general. It shows the phase of maturity that the country is going to go through. And I suppose another observation I've always had about Indonesia is that the risk appetite of the Indonesians, I feel, is quite different from that in Singapore. And I've always thought of Indonesia as being able to achieve a lot of growth despite a lack of political cohesion. Whereas in Singapore, a lot of the innovation that is kind of championed is usually government-led. I mean, you look at everything from Block 71 or the amount of funding or the grants or the support from all the various boards. That's, it's very top-down. Whereas the willingness to take risks and the creativity that's born out of that appetite is one which I think is quite, it's very energizing in Indonesia. So I think you see a lot more entrepreneurship, a lot more people who are trying out new things, and a lot of them are, becoming very successful. And I think Danny's probably a case in point for a business that he sort of created back in the day. So I think all that is a difference which is pretty exciting and I suppose quite different from what we see in a lot of mature markets.
Great, thank you both for the insight on trends, especially given what's happening with COVID in Indonesia. I'd love to move on back to Singapore, and Nelson and Kevin would love your observations on the property market here in Singapore. Obviously, most of the attendees are here. Anything you'd like to share, any observations or trends you'd like to share with the group?
I can start, from specific sort of data standpoint and things like that. Actually, bridging and comparing to Indonesia, transparency of data is just better here, right? We had, as mentioned, we do run a course in analyzing real estate markets using data. We have had some participants try an analysis of Indonesian markets versus Singapore markets. First of all, sort of official transaction records, much harder to come by in Indonesia. Participants did manage to make an analysis of asking prices from listing websites. And, just it's a lot harder, right? They ended up having the kind of accuracy level where the error rate is in the mid-teens versus, for example, if you analyze and try to predict Singapore real estate transaction prices, your valuation model can be within about 3 to 4%, right? So the data environment is just different in Indonesia versus Singapore. I don't know, VC space might be interesting. I do feel like there's an opportunity here for people who are of that in that interest area to look into Proptech VC funds based in Southeast Asia, and maybe even look at Singapore. There's some opportunity here. Another thing, if we're talking about the property market specifically, I think we do look and analyze at residential markets in Singapore. Taxation and government controls in Singapore are pretty high, right? So in terms of doing any kind of investment, it's a little bit challenging to do residential investment play unless you're doing some kind of development or co-living or something else like that. ABSD at like 25% for corporations makes this a little bit challenging. We did some analysis here around sort of net yield opportunities for investing in residential across Singapore. There is variability, right? And even when we look at the indices, so we built some custom indexes. When we look at the indices, there's a lot of difference, right? Like right now, people are chasing up the high end of the market, but at the same time, different locations are different, right? So, one of the things that we plotted, and we can see, for example, people like city center properties, right? You say, oh, hey, it's a good way to preserve your wealth or whatever, but the average sort of condo in District 9, may have been down to flat, as opposed to some of the rest of central region could have been going up a lot more. So there's some variety on that. In terms of sort of the net yield that we're looking at, just given, I don't know, people's investment goals or sort of the interest rate climate, or for whatever reason, our net yields here, if you include sort of, if you define the net yield to include also what one might pay for a mortgage for an average individual, if you try to buy to let a property in Singapore, that tends to be challenging, tends to be 0 or less. If you're able to buy and lease out, one of the interesting bright spots, if you're able to buy and lease out, say, HDB older unit in Jurong West, for example, then you get yields that are close to 10% or something like that. But there are restrictions around whether you're able to do that. So that's what we observe here, right? That there's a lot of differences. Generally, it's difficult to invest by setting up a company. Yields tend to be a little bit lower, and that's what we're observing here. Yeah, maybe Kevin, do you have further thoughts?
Yeah, thanks, Nelson. I think I think Nelson's point about the yields just kind of being very different depending on what type of product or location you're looking at is quite apparent. And I suppose what's been surprising to me and a lot of people is probably the weight of capital that's kind of come in Singapore, which has sort of driven yields down, prices up much more acutely than we would have expected during a period of time. Frankly, last couple of years has been difficult for a lot of people. So that kind of bifurcation of the real estate market is apparent. I think the kind of stuff that Nelson has been working on to really use data to analyze property to kind of which at the end of the day, it's still something which is a sector or product that is driven somewhat by emotions, and to be able to kind of get more support from a quantitative perspective, because at the end of the day, I mean, I think that's truly what it is. Any financial investment into any product type, real estate or equities or anything else, should be thought from a financial driven perspective as well. So having that sort of quantification of that data that supports whatever thesis that you might find or you might want to have, and to find that the data either does support it or does not support it, I think it's quite, it's always good for any investor to kind of keep in mind that the sort of the weight of capital that's coming in, it's been quite surprising. And I think not to try to pin down any forecasts, but it's hard to see that going away, especially given the sort of prominence of Singapore as a destination, strength that's come out during this COVID period. I think the sense of attraction of Singapore becomes even stronger. So there are a lot of things here there which I think will remain.
Great, thank you both for the insight. Moving back to Indonesia, earlier we talked about real estate, obviously. Danny, you mentioned logistics. I'm just curious, what other industries do you see having great potential in Indonesia from your experience there? And what advice would you have for entrepreneurs or senior managers who are hoping to expand their businesses into Indonesia?
I think outside of real estate sector, an area that is expanding very rapidly is on the digital economy or e-commerce. Probably hear everyone in the newspaper nowadays that the value for digital economy is expected to value around, I think, 124 billion by 2025, making the country a prime location to invest. Things like digital wallets, cloud kitchen, online learning now. Digital marketplace is one sector that's getting a lot of attention. I know that VCs are putting many capital in backing those ventures. Now, outside of that, Indonesia right now is building many infrastructures. I think the current president is the first president after Suharto, which heavily invests in infra. I think right now the Indonesian government they're aiming to invest around 430 billion in infrastructure project from 2020 to 2024. That's, I think, if I remember correctly, around 20% increase from what they approved in 2019. And the great thing about infrastructure project is that it's, back then, many of them are only for government entities, for state-owned enterprises. But now the government has made it to become a public-private sector partnerships. And across COVID-19, the one area that's making great revenue, great money is the healthcare and pharmaceuticals, right? But the great thing for foreign investors now is that the government has a new rule where hospitals that have 200 beds and above can be owned by 100% foreign shareholders. Back then, for us, majority needs to be held by an Indonesian company. So I think moving forward, maybe I'm biased because I'm Indonesian and I'm in Indonesia, but I think the country is gaining traction, and with one of the highest population in Southeast Asia, where many of them are moving from the low end of the market to mid-level, it will be a good opportunity for anyone who would like to invest here. Now, the one thing I like to advise, caution everyone, is that getting information is not easy. It's like Nelson said, one of my greatest headache when it comes to looking into a project is what's the data? Where can I get the right data? Because even going to advisors like the JLL, the Colliers, their data are very skewed. Oftentimes developers do not want to share that information, and sometimes government also like to keep a close knit to it. So, maybe the best advice is have a lot of friends in high places.
Certainly helpful in many markets, for sure. Yeah. Thank you for that. One common denominator between the three of you is that you all started your careers in finance, working for financial institutions. So we'd just love to hear in what ways you think this training prepared you for a career in real estate, and what advice would you have for current students? We'll be sharing this afternoon's podcast with students and alumni. So what advice may you have for them or recent graduates who are considering a career in finance?
Yeah, sure. I can take the question first. So I started my career at Morgan Stanley. I was there for over 10 years in investment banking, and then subsequently in the private equity arm of the real estate businesses. And I think that the advantages of being in that I took away from being in a finance starting career is that the kind of rigors of finance, the training, the doggedness, the robust fundamentals that you kind of come away with, sometimes infused with a little bit of creativity, that is a very good foundation that you build. The networks and relationships that you are able to build when you're young by constantly proving yourself internally as well as to external people, I think these tend to bear fruit down the line. I do think that in today's marketplace, the mentality is a little bit different, and potentially that's also reflected in how the young graduates are thinking as well. Because where I think there's a much higher emphasis placed on ideas and creativity rather than the execution. It's a pursuit of ideas that's sort of fueled by the importance of being the first mover, having that first mover advantage. It's so huge now that it sort of creates a bit of imbalance between the ideas and execution. At the end of the day, I think it's good for the marketplace. There's the growth of ideas, the kind of percolation to see what really kind of floats up to to the top and what's successful will be good for the marketplace, because there's new idea generation, there's new products that come out. So all that's good, but it's just it's a difference that I'm observing in expectations of graduates and what people are looking for, or where the capital is kind of flowing towards. So that's one thing I would say. So where it relates to the more recent grads or guys who are still in school, I suppose these are the considerations that you may want to be aware of. The benefits of finance, I feel, or any more traditional sector per se. I think they give you more room for more robust fundamentals, just because there's a longer history there. Whereas a career in a younger industry may reward you with some generous upside if you get it right and you pick the right team and pick the right people to work with. And I suppose that everyone would have a decision tree, whether you're young in your career or more mature in your career, whether the traditional sectors that we're more familiar with is the more lucrative or more exciting venue, or whether it's something which is in sort of new industry, new tech, which would be more exciting for the person.
Yeah, so I'm happy to comment. So for me, sort of starting out in finance industry, helpful for the current venture in terms of, I think I was able to see kind of a roadmap for one potential path, hopefully a likely path for where real estate industry is going in the future. Sort of after Columbia, just at that timing, joining a data-driven or quant-driven hedge fund, still a relatively new idea, although you did have sort of Renaissance Technologies and Bridgewater and so on. And then, we fast forward till today, right? Today, there's a lot of competition in the space. 1/3 of all hedge fund assets under management is quantitatively driven. So I was able to see that evolution. When I was joining, there were still people shouting, open outcry pit, right, to do trading. And you can see that evolution from not really knowing where the price in the market is, to then having the pricing and the data all be really very easily accessible and almost democratized, to then doing quantitative analysis, and then you have quantitative funds sort of springing up and being fairly established force in the marketplace. And this may be what we're seeing in the real estate industry, right? Hopefully, maybe. You start first with, we don't really know where the price is. You got to ask the agent, ask the owner, and it varies by asset class, right? I'm happy to maybe make the most common example, which is most accessible to people, which is residential, right? And then we think about, okay, thinking about Singapore, Property Guru comes in, and a bunch of others as well, right? And now we kind of know where the market is. Singapore is pretty transparent, so we have URA and Realist sort of revealing those prices, and then you have now we can talk a bit more globally, data startups, right? Really popular now in the US. There's like Cherry, Reonomy, GeoFi, House Canary, players like that, and actually getting pretty big. And then you have index providers as well, and then you're beginning to see some quantitative analysis sites, right? So in China, if anybody's looking at that, Bridge5 Asia is a really awesome platform for that. And we're looking at US markets, people can analyze sort of cadastral maps and zoning envelope cities, really exciting for that. And we're at the beginning phase of quantitative investment approaches in real estate, right? So Skyline AI, well-known startup, recently acquired fully by JLL, otherwise it's backed by DWS and TLV. And then you have a couple of other players joining in as well, right? So Investor and Oxford using AI methods in Australia. Two Sigma is a quant fund is a quant fund in public markets, starting to look at that into real estate, right? So starting from finance, kind of have a cheat sheet for where the real estate industry might be developing. Coming to the other part of your question, for current students or recent graduates looking at finance, I can only really comment on sort of the quantitative investing, quantitative trading part of it. It's a diverse field. So, I think Kevin and Danny can tell you about the other fields. I think Kevin was talking about, another part of it as well. I think, for quantitative trading, it's very much evidence-based. I like that. It's, it is about results. In a lot of places, you can see and day to day how many dollars you've contributed to the company or destroyed for the company on a bad day, right? And you know that, and whether when you're getting rewarded it's generally quite clearly contributed to what you've done. So, if that sounds appealing to you, then that can be really good, right? On the flip side, it's also getting a little bit saturated now. So it's getting a little bit more and more challenging. If you are a recent graduate, right, this is getting more and more technological. The expectations in terms of knowledge for programming and data science are just going up and up. But yeah, if you're looking for that type of career, that can be a very interesting part of the finance world.
Okay, I guess I'll comment about, I think, what advice for current students wants a career in finance. I think don't. It's better to become a YouTuber and be an influencer. But joking aside, I started my career in a traditional bank in New York. So what I did was to provide mortgage loans to developers and individuals. Now, the great thing about working for a company that's been established for hundreds of years is that you have a system. Now, as someone who's new, just graduated from college, right? Knowing the system is very important because that laid the groundwork for everything. I know that some millennials will say something different to me now because everyone chooses to work for startups. But I think even founders for startups, before they work for a company that have systems. But when I used to be a banker, I was taught that to trust data, to look at the data, check it twice, 3 times. And after you check it, you need to actually talk to the people who's making those data to make sure that there's no mistake. And I think that's very helpful for me now as a developer because real estate development is very, I guess there's a lot of moving parts. We have contractors, we have architects, we have suppliers, operation teams. Everyone give you great stories, great believable stories, and the numbers look nice. But in order to have the project be delivered on time and to satisfy profits for all the stakeholders, you definitely need to look at the data closely. And even that, sometimes in Indonesia, the data lie. Like I said before, I guess we need someone like Nelson here to help us. So my advice for students in Colombia who's thinking to have a career, I think nowadays it doesn't really matter whether you work for a startup or you work for an established company. The very important thing is that there's no shortcuts. You need to learn everything. And in life, in business, the 2 things you need to learn is finance and accounting. Knowing the numbers are very important. I think those are the 2 important things I can tell you what.
Thank you all for the suggestions. And like I said, we will share this recording with alumni as well as the Singapore Students Association. So your advice will be helpful to them. Danny, since we're speaking with you now, obviously your background in real estate has been more on the operations and marketing side. So what have you seen from those lenses and how the industry has evolved over the recent years?
It's evolving into more digital. And 2 things, I don't want to say digital. Of course, you have digital marketing side of things, right? So people now are not just marketing using billboards, magazines, they use Google Analytics, they use TikTok, Instagram as well. But also on the funding side of things, we see, I guess, as I say, creative financing. Back then, when you develop something, there's only 2 choices: ask for friends or go to a bank. Now we have this thing called crowdfunding. Basically, that's getting all your friends together and to fund a project. And what I like to say is like a mini REIT. It's much simpler than a REIT, but better. And I think in the future, at least it's already established in the United States and also Singapore and Australia, is using cryptocurrency to purchase real estate. So I think with the faster we move, data will be more transparent. Getting cross-border transaction will be faster, and funding will be cheaper than ever.
I want to make sure we leave time for the attendees to ask their questions. So one final question for me. What is one thing you wish you had known about the real estate industry when you first started that you know now?
So I can start. Maybe I feel like there's still a lot more that I'm learning about the industry in any case. So, I feel like there's some real stickiness in terms of what people or companies are willing to or used to paying or paying money for. And so, it's sort of pretty crucial to frame your offering in a way that people are used to or seems like an extension of things that they can recognize the value on. I don't know. I feel like when we were in finance, a little bit more free with trying something or experimenting with new data set or data source or something like that. I don't know, maybe Kevin and Danny will disagree or have a different experience, but I feel like it's a little bit more, there's a bit more stickiness in terms of I'm used to paying on a transaction basis, so things attached to the transaction, that's okay, versus like here's just a data set or data source. It's a little bit of a harder sell. But yeah, more things to learn along the way. Danny or Kevin?
Well, I agree with Nelson. I think I'm still learning as well. I mean, often, I thought that, building an apartment is easy. Just get an architect, get an M&E engineer, get some funding, but it's not the case. There's a lot of soft skills. You need to deal with the government. So that's one area that I wish I had a mentor to do that. Being someone who lived in the United States for a long time and only working in Indonesia for 8 years now, and have to develop is a hard task because the two cultures are different. New Yorkers are pretty brass, right? And we take no for answer. But here in Asia, it's kind of like you need to have good negotiation skills. Or what I like to say is that you go around circles. So I wish that I had mentors to make those things.
Yeah, I think I can very much appreciate and understand where Danny's coming from, in a similar market as well. One thing I wish I'd known about real estate from before that, when I started was probably that, to learn the fundamentals and methodologies well, but just to be aware that whatever feels normalized in terms of assumptions will very quickly change. I think the world, the pace that the world moves at is just so fast, and we just always got to be nimble and proactive.
Great, thank you both. Are there any questions from the audience? I see we still have over a dozen attendees, so would like to open it up to you all. Who has the first question?
I'll go ahead, Novi. My question is about, I guess, interest rates, which are generally very fundamental to real estate markets. How do you guys think the outlook for interest rates will be in Singapore and Indonesia, and how is that going to affect real estate prices?
Okay, I could take a little bit here from Indonesia. So the great thing about Indonesia, the great thing about the pandemic that's happened in Indonesia is that the government has created many subsidies. Subsidies for people who are purchasing ready-made housing. They don't have to pay as much tax anymore. And the banks are reducing the interest rate as well. Normally, rates for a mortgage hovers around 8%, 9%. Now, to stimulate the economy, they're reducing to around 5%. So I think in the short term, we might see people buying more. Developers will be easier to get financing to build those houses as well.
Yeah, I think my with interest rates I feel it's always hard to predict beyond the next couple of years, and I think that it's still going to remain low for next 1-2 years, and that's it has fueled a lot of the demand for real estate in the last couple of years, and I think it will continue to do so for for the next 12 to 24 months as well. I think that you're right, Shakai, that the real estate has allowed a lot of end users to buy. It's also allowed a lot of companies to sort of tide over the difficulties that they've had. We haven't seen any distress sales in Singapore. Very little, some in Indonesia, but not to the extent that you would expect, knowing how how vulnerable some of the companies are. I think that the banks in general are not willing to take a hard stance towards the borrowers. And without that, you're not going to see the sort of distress lending. In Indonesia and as well as in Singapore, the government has sort of stepped into, try to help manage the banks and what they're, how fiercely the banks can behave towards the borrowers. So I think I don't think the current conditions in the interest rate market is going to change a lot. So the demand is still going to be fairly strong for real estate.
So, I mean, I think it's really tough, right? I feel like, I was in the hedge fund trading through 2009, right? Great financial crisis. We have interest rates being slashed all the way to zero. I feel we never really got out of a low interest rate environment, and then we're back down to zero again. And I think when we were graduating, we can still look at the recent data and say that, hey, we look at, I guess, Volcker era, that interest rates can be in the teens or whatever. And it's just been a very long time since you had interest rates at those levels. But then if you look at the super long history, I think somebody did a study of, I don't know how they tracked it, but like many, many hundred years of interest rate data. There are some periods when it stayed low for very, very long. I mean, this is relevant for Singapore, obviously, because, I guess we can't directly control that, right? But we just import it and we can control the FX rate, so that matters. I guess you have two paths, right? So nobody knows which one. Either we are seeing, I was just listening, I listened to some of these podcasts by bartenders, right? Just out of interest, because I like to make drinks and things like that. And they're just saying like, hey, I'm running out of like Jack Daniels. There isn't enough Jack Daniels in the world, right? So as the economy opens up, there's just these massive shortages, right? And they're talking about how, labor market is super resurgent, right? So, one path is that you get back to sudden runaway inflation and the interest rates have to catch up. There's another path, which is saying that, hey, this is just a temporary adjustment, right? As we renormalize the COVID. And, the thing is, there's so much leverage investment that we can't really have too high an interest rate. So maybe we stay low. So that's the unsatisfying answer that I guess there's a couple of scenarios. Could see it play out either way, I guess.
Thank you.
Any additional questions? Well, and I know we all want to get on with our Saturday afternoons. A big thank you to Danny, Nelson, and Kevin. You had a lot of insight to share, not only your experiences, but specific resources, websites, companies. So we will definitely share the recording with others. And thanks for taking the time to do this for us today. And thank you to all of the alumni and friends who dialed in for our AGM and this afternoon session. Please, for the alumni, please do sign up for membership and our newsletter so that we can keep in touch about future events. And we hope to see you at an in-person AGM in 2022. Thanks again, everyone.
Thanks, everyone.
Have a good weekend.
Thank you, everyone.
Thank
Have a good weekend.
you.